It's been an interesting time for real estate IPOs. Companies ranging from mortgage lenders to property technology startups are going public in large numbers through a combination of traditional IPOs and special purpose acquisition companies, or SPACs. Here is Chamath's huge new bet on this one software stock. If you're a subscriber, well, welcome back to Investing with You. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing that like button. Now, let's get into it. Bhatia announced that he is leading a PIPE in Latch, a maker of smart locks and building management software. Latch will go public by merging with SPAC TS Innovation Acquisitions Corp. Latch is the best SaaS company I've ever seen or invested in, Bhatia said. His announcement comes just 1 week after he tweeted about the $415 million private investment he led in commercial EV company Proterra. He called that financing his biggest investment in climate change. We just learned that the most recent real estate business to go public is smart lock maker Latch, which is going public through a merger with TS Innovation Acquisitions Corp., a SPAC backed by property developer Tishman Speyer. Here's what we know about the deal, what Latch does and where it could be heading, and whether this is a company to keep on your radar. Technically speaking, Latch isn't going public, at least not in the traditional sense. The company is being acquired by the TS Innovation SPAC. TS Innovations raised $300 million in capital in 2020, and a group of investors, including notable SPAC investor Chamath Bhatia, are contributing additional funding of their own, known as a private investment in public equity, or PIPE. In all, Latch will receive $510 million in fresh capital as part of the deal. Including this cash infusion, the deal values Latch at $1.56 billion. Once the deal closes, expected in the second quarter of 2021, Latch will trade on the NASDAQ under the symbol LTCH. What does Latch do? Latch is primarily known as a maker of smart locks. However, the company is so much more than that. Specifically, Latch is a software-as-a-service (SaaS) company. Its primary product, Latch OS, is a full building operating system. It includes the company's smart lock technology, but also enables guest and delivery management and allows landlords and residents to manage smart devices such as thermostats, lighting, and more. In short, Latch's system aims to bring rental housing into the 21st century. In addition to selling the devices themselves, Latch's customers pay an ongoing subscription fee to the company for the services. According to investor Chamath Bhatia's one-pager on his Latch investment, he sees a massive opportunity for the company to bring its smart home technology to the 47 million rental homes in the United States and 93 million apartments in Europe. In addition, 1 in 10 new multifamily apartment buildings in the US were built with Latch's products in 2019, and there's a big opportunity to increase this over time, especially with the financial backing of prominent real estate investors like Tishman Speyer. Latch boasts a 154% net dollar retention rate, which means the average Latch customer spends 54% more than they did a year ago. The average customer agreement is for 6.3 years, and most prepay the entire contract in full. In fact, Bhatia called Latch the best SaaS company I've ever seen or invested in. Should you invest? Unlike many other SPACs that have recently announced deals, TS Innovation isn't trading at a massive premium to its deal price. For example, Social Capital head of Sophia Holdings 5, which recently announced it was taking fintech lender SoFi public, trades for about 120% more than the SPAC's net asset value. Meanwhile, TS Innovations trades for about 38% over NAV, so you can get into Latch for not too much more than the insiders are paying. That said, like any fast-growing, newly public company, Latch is likely to be a rather volatile investment, not appropriate for investors who don't have both a long-time horizon and a high-risk tolerance. It's important to note that Latch is not profitable. It lost $61 million last year, and it's still in its very early stages of growth. But if you're willing to ride out the roller coaster ride, Latch certainly has some big growth ambitions and could be worth a look. You probably know that real estate has long been the playground for the rich and well-connected, and that, according to recently published data, it's also been the best-performing investment in modern history. And with a set of unfair advantages that are completely unheard of with other investments, it's no surprise why. But those barriers have come crashing down, and now it's possible to build real wealth through real estate at a fraction of what it used to cost, meaning the unfair advantages are now available to individuals like you. Latch, an enterprise SaaS company that makes keyless entry systems, has raised $152 million in private capital, according to Crunchbase. Sunlight Financial, which offers point-of-sale financing for residential solar systems, has raised north of $700 million in venture capital, private equity, and debt. There's no escaping SPACs for a bit, so if you're tired of watching blind pools rip private companies into the public markets, you're not going to have a very good next few months. Why? There are nearly 300 SPACs in the market today looking for deals, and many will find one. Think of SPACs like increasingly hungry sharks. As a shark gets hungrier, while the clock winds down on its deal-making window, it may get less choosy about what it eats or take public. There are enough SPACs on the hunt today that they would be noisy even if they were not time-constrained investment vehicles. But as their timers tick, expect their deal-making to get all the more creative. This brings us back to Chamath's 2 deals. Are they more like the backed SPAC, which led us to raise a few questions, or more akin to the Talkspace SPAC, which we found pretty reasonable? Let's find out. Let's start with the Latch deal. New York-based Latch sells Latch OS, a hardware and software system that works in buildings where access and amenities matter. Latch's hardware works with doors, sensors, and internet connectivity. The company has raised a number of private rounds, including a $126 million deal in August of 2019 that valued the company at $454.3 million on a post-money basis, according to PitchBook data. The company raised another $30 million in October of 2020, though its final private valuation is still not known. As Chamath tweeted, Latch is merging with TS Innovation Acquisitions Corp., or $TSIA, the SPAC associated with Tishman Speyer, a commercial real estate investor. You can see the synergies as Latch's product fits into the commercial real estate space. Upfront, Latch is not a company that is only reporting future revenues. It has a history as an operating entity. Doing some quick math, Latch grew booked revenues 50.5% from 2019 to 2020. Its booked software revenues grew 37.1%, while its booked hardware top line expanded over 70% during the same period. That could be due to strong hardware installation fees, which could later result in software revenues. The company claims an average of a 6-year software deal, so hardware revenues that are attached to new software incomes could low-key declaim long-term SaaS revenues. Palihapitiya isn't the only investor showing up on multiple deals, but he is one of the few individuals showing up so often in the public announcements. These transactions often attract big names, usually institutional investors such as BlackRock and Fidelity Management and Research Co. It's possible other private investors are investing in SPAC mergers without disclosing their involvement. Palihapitiya is dabbling in many sectors through these investments. Other SPAC deals he's contributed to in the past few months include 3D printing company Desktop Metal Inc., rare earth company MP Materials Corp., electric bus manufacturer Proterra Inc., and car insurance company Metromile Inc., statements showed. What can you say about Chamath's bet on Latch? Let us know down below in the comments. And hey, if you enjoyed the video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching, and we'll see you in the next video.